You close an international client, send the invoice, and wait for the deposit. But before that money even hits your bank account, a massive chunk of your hard-earned profit just vanishes. If you run an Indian agency, a SaaS company, or a freelance business in 2026, receiving payments in US dollars, British pounds, or euros through legacy platforms is actively draining your margins. When you set up a PayPal account, you're told the receiving fee on international payments is 4.4%. For a lot of business owners, that sounds like a standard cost of doing business globally. This chart breaks down a real $1,000 transaction. You lose the stated $44 right away. But then comes the hidden trap, an exchange rate markup. They add roughly 4% above mid-market, shaving off another $40. Scale that up. Bringing in $10,000 a month means losing 75,000 rupees every single month. Sticking with a familiar legacy platform effectively places an 8 to 9% tax on every dollar your business earns. Losing 9% of your gross revenue hurts, but losing access to the other 91% can actually break your operations. Legacy payment processors use automated risk algorithms calibrated for Western markets. When an Indian business starts scaling digital services and receiving higher volumes of international payments, those algorithms frequently trigger false alarms. The result is a limited account. Your funds sit completely frozen for anywhere from 21 to 180 days, often with no warning and no immediate way to appeal to a real human. To fix this, we need to audit the modern payment landscape for 2026 and map the right alternatives directly to your exact business model. We map the current options on this quadrant chart, measuring total cost against how you charge clients. Relying on Upwork, you're captive to Payoneer. You absorb roughly a 5% total cost. But if you operate an independent B2B agency or consultancy, you're likely managing large, single transfer invoices of $5,000 or more. For these massive direct transfers, platforms like Wise and Skydo operate as highly efficient specialists. They sit perfectly in the low-cost zone, charging flat fees of just $10 to $22 per thousand, with conversion rates right at the mid-market line. Their primary structural limit is how they accept that money. They strictly process bank transfers. There are no payment links, no credit card processing, and no checkout pages. If you run a pure retainer agency, that works. But if you are a SaaS founder, a course creator, or an e-commerce brand, an invoice-only tool breaks your sales funnel. You need low-friction, instant card payments to convert buyers. When your business requires both rock-bottom transaction costs and full-scale checkout flexibility, the math points heavily to Playto Pay. First, it assigns you virtual bank accounts, giving you dedicated US routing numbers and European IBANs to receive international wire transfers directly from your clients. Of course, not every Indian business sells exclusively abroad. You might have a mixed model, serving international clients while also selling to domestic buyers here in India. For local buyers, you absolutely must offer familiar methods like UPI, PhonePe, and domestic cards without adding friction to the checkout. For strictly domestic INR to INR transactions, Razorpay is incredibly effective and remains the undisputed leader. But its architecture stops at the border. It cannot process incoming US dollars or British pounds and settle them into an Indian entity's bank account. You are left with two choices: run Razorpay and a cross-border tool side by side, or use Playto Pay's unified backend, which processes both local UPI and international credit cards in one place. Let's cut through the noise and route your specific operation to the correct infrastructure. For marketplaces like Upwork, accept Payoneer's routing. For large, infrequent wire transfers, deploy Wise or Skydo. If selling solely inside India, integrate Razorpay. But for a mixed business needing checkouts and the lowest foreign currency cost, set up Playto Pay. Selecting the wrong payment rail for your specific business model directly cannibalizes your bottom line. The rule for evaluating any cross-border payment platform is simple. Never trust the baseline percentage alone. Always calculate the all-in cost. If a platform isn't explicitly transparent about its forex exchange spread, you are paying a hidden premium. The tools available to Indian businesses have evolved. Sticking with the legacy processors you used 5 years ago is now an active choice to surrender up to 9% of your revenue and hand over control of your own money.